Paul Sankey from Sankey Research. Paul, great to see you as always. I guess the first question is outlook for oil prices next year, and then maybe we can move on to some of the stocks. There's hope for a cyclical recovery, but have we already seen quite a lot of that in oil prices?
I don't think so, and I'll come back to that in a second. And I've been very interested by what you've already said on the show this afternoon in terms of inflation, which we have to think about. And of course, I'll add in about the dollar. But first, just to wish you a very happy new year and invite you to a virtual party tonight on Twitter, which we have through the EFT community. That's our Twitter virtual party, Kenny Lay's Roll Call. And you're all welcome, viewers. And of course, you, Wilfred and Sarah, please. So the outlook, I think at this time, the biggest arbitrage I see is really related to the dollar in terms of people being very bearish and perhaps not being as bullish on oil. And of course, you can express a bullish view on oil through the stocks. So I don't think the stocks are really discounting the potential for much higher inflation or a much weaker dollar, which would tend to go together. Additionally, I think, Wilfred, over the course of the past year, we've had a real situation of what doesn't kill you makes you stronger. And of course, what we're seeing here is not only finally the bankruptcy of Chesapeake, for instance, and consolidation in the sector, which you guys have been following, but also even up to activism within Exxon. So there's a number of factors here that make us actually pretty optimistic about 21 and very optimistic about the 22 onwards timeframe once demand is back in 21, assuming we do get jet fuel demand back, which is the key.
So where do you want to be positioned? In the majors, which clearly have very little risk of going bust going forward, or some of the smaller, more high beta geared names, if they've, as you said, got through this tough year and perhaps come out the other side a little stronger?
Well, I'm running a refining conference on Monday, and that in itself is a good area to start. We've got renewable diesel as a theme for some of the refiners. So we like the big refiners here, assuming, again, that jet fuel demand comes back, which is dependent on our recovery, obviously, from COVID. There's a choice, really, Wilfred, between investment and speculation. So obviously, the higher risk names would be obviously more speculative, higher risk reward. Names, for example, if you want to go wild, buy Oxy warrants or something that's really very high risk, highly indebted companies. But again, if we get a move in the dollar from, say, 90 on the DXY to 70 on the DXY, I think you'll see $70 oil. At that point, you really want to be in some high risk names. OVV, Avintiv is another one with a lot of debt.
Shepard Smith here. Thanks for watching CNBC on YouTube.